Let's get some thoughts coming from James Garish. He's joining us now from Shaw & Partners in Sydney. James, one that we didn't mention in much detail there was Wesfarmers, down marginally off the back of its report. Is it the outlook, some of the potential headwinds the company was flagging going forward, including the withdrawal of stimulus?
Yeah, good morning to you guys. Yeah, Wesfarmers was an interesting one today. So the result was actually pretty much in line at the top line in terms of sales. The profit line was pretty strong, slightly ahead of market expectations, and the dividend was in line. Plus, they announced a special dividend of 18 cents per share. So, the stock was higher on open this morning, but it's come back off its earlier highs. Wesfarmers never provide detailed financial forecast or guidance, so that's not a huge shock in terms of Wesfarmers. They did, as you made mention of, Nadine, they have been talking down what happens post the stimulus rolling off, which is, they've been talking that same rhetoric for the last couple of months, and they're clearly sort of lobbying for a continuance of some sort of stimulus that would help out their sales. So perhaps that's the reason. But it traded up near $50 or above $50 this morning, Nadine. So that's all-time highs for Wesfarmers.
Okay.
Let's go and move across to the property space in Domain Group. Quite a different share reaction to the results of what we saw with REA earlier in the earnings season. What did you make of the result?
Yeah, Domain was actually an interesting one. So I think the share price was stronger earlier. It's come off the highs again. It's a company that's done pretty well leading into results. So in terms of revenue, they beat at the revenue line just marginally. They did 261 and a bit revenue. The mark was at 260, but it was where at the profit line they beat most. So they printed about 21.6. The market was at 17.7. They didn't provide any hard line guidance for FY21, but they spoke, like a lot of companies, that July was a really strong month. So listing volumes, particularly in Sydney and Melbourne, have picked up substantially in July. The rest of FY21 is going to be dictated by the health and economic outcomes following COVID-19. But a really good set of numbers. And the important thing is that July across what we're seeing across many companies has been a really strong month. So that's a positive, obviously, to start the new financial year, guys, with strong momentum.
Okay, yeah, it's always been a question worthwhile asking. What have you seen in the past few weeks or so? Origin Energy is getting hammered, down by close to 7% in the wake of its result. But to Scotty's point, most of the analysts' early estimates that I've been reading have been quite positive, talking about the company in resilient terms. We'll be speaking with the CEO, Frank Calabria, in just a bit. So what would you want to know for the company? Why are we seeing such a negative reaction?
Yeah, ask him about why why the lower dividend payout is a proportion of free cash flow. So Origin, you're right, they met in terms of their FY20 numbers that the market was anticipating. The only weakness was in terms of the dividend, plus the dividend, I think, came in about 27% of free cash flow. So they guide to 30 to 50% of free cash flow, in my understanding. So the fact that they're going to, moving forward, they're probably going to pay lower dividends. A lot of people hold Origin solely for the dividend income. So perhaps that was the area of weakness in terms of that, and why they're being so conservative around paying that out in terms of the dividend there, Nadine.
Yeah, it's on my list, James. Good one. Thank you. I feel like we're really putting you through your paces, but we can't go without asking about Qantas. Selfishly, what really stood out to me was lack of international flights until at least mid-2021. I'm sure we all felt a little kick in the guts over that one. But it is talking up cash flow from the freight business and cash flow from the the rewards program as well. Was there anything to like in this Qantas result, or is it just bad news as far as the eye can see?
Yeah, probably resilient. So we saw it in corporate travel yesterday. These businesses are getting hit really hard, and IDP to an extent today as well. So these businesses are getting really hard, but they're proving that they're probably more resilient than perhaps the market was anticipating. In terms of Qantas, the cash burn forecast for FY21 relative to the amount of cash and the strength of their balance sheet, I think, is another thing that stood out to me. So, I think a lot of these companies are in a better position to handle the decline in top line sales than perhaps the market was anticipating. We all know the expectations were low. We all know that it's going to be a tough time, but these companies have done a pretty good job in a really tough environment. And in terms of Qantas, you're right, their freight business is going well. The frequent flyer program is going particularly well. And they'll see this through given the strength of their balance sheet. They raise capital, etc. So I actually thought it was a pretty resilient update from Qantas today.
Resilient, perhaps that'll be another word of 2020, a little bit more positive than the ones that we've been using so far.
Here's hoping maybe rebound. James, we can't let you go without getting your views on Afterpay. Guiding higher overnight. A lot of people obviously welcome the result. Record highs for the shares today. What have you made of it?
Yeah, it's a good update, obviously, and it was all around sort of lower bad debt charge, better collections, so that improves margins, and it's also got a positive read through for the rest of the buy now pay later space. And if you want to make an extension to that, it also bodes pretty well for the economy. The bad debts are obviously lower than perhaps first thought. And that's put a big uptick in the profitability for Afterpay. They report their full year numbers. I think it's in a week's time, so this time next week, and then Zip is out on the 27th of August. So, look, I think the sector's got really strong momentum. Afterpay's numbers today show that the business is performing well in those areas of risk. So, yeah, I like the result. I think the stock goes higher from here. Ditto for Zip leading into their report on the 27th.
James Gerrish from Shaw and Partners, thank you for joining us on the program today.